What if the money you've counted on for retirement, your Social Security, was about to shift beneath your feet? Because in 2026, that's exactly what's happening. This isn't just a tweak, this isn't a footnote in the news. This is a systemic shakeup that will affect nearly every retiree, every senior on disability, and every American hoping to access the benefits they've worked their whole life to earn. 8 critical changes, plus 2 more bonus shifts, are coming, and they won't wait for you to catch up. Some will quietly steal from your future. Others offer relief if you know how to claim it. Let's begin with what's being touted as a win, but may end up a loss. The cost of living adjustment for Social Security, better known as COLA. In 2026, it's expected to rise 2.7%. equating to about $50 more per month for the average retiree. Sounds helpful, right? But here's the truth, it's nowhere near enough. Inflation didn't just rise, it surged and never returned to normal. You've seen it in your grocery bill, at the gas pump, in your utility payments. What used to cost $2 now costs $3.50, and that's not temporary. While economists argue over whether inflation is slowing, they conveniently ignore that prices remain high and stubborn. That's why a 2.7% COLA doesn't even scratch the surface. According to the Senior Citizens League, seniors have lost over $370 in purchasing power since 2010 due to a COLA formula that's outdated and rigged. Why? Because it's based on spending patterns of urban wage earners, not seniors. That means it doesn't account for the massive share of income seniors spend on essentials like prescription drugs, housing, and medical care. And yet, this same flawed system is used to decide how much, if anything, you get in benefit increases. The government looks at inflation from July, August, and September to finalize the COLA. July came in higher than expected. If August and September follow suit, COLA might inch up to 3%. But again, 3% doesn't mean prices are down. It just means the rate of increase is slowing. You're still paying more than ever, and your benefit hasn't caught up. At the same time, high-income earners will be contributing more into the system. In 2026, the income cap subject to Social Security taxes will rise from $176,000 to $183,000. That adds more money to the pot. But let's be honest, this change is a band-aid. It's a small fix for a system that's bleeding out. And while it sounds like equity on paper, it doesn't guarantee protection for your benefits. Now, for those who paid the maximum throughout their careers, here's a rare win. The maximum benefit at full retirement age will rise to $4,218 per month, up by $196 from the previous year. It's a meaningful increase, but only if you're among the very few who qualify. Most Americans won't get anywhere near that amount. And for those people, every dollar counts. That's where new tax deduction rules come in. Seniors over 65 could now deduct $23,750 if single, $39,100 if married, filing jointly with one spouse, over $65, $46,700 if both are over 65. These figures include a standard deduction, a senior bonus, and the new $6,000 per person deduction from recent legislation. There's a catch. You must have taxable income and file correctly. If you don't know the rules, or worse, don't even know this change exists, you're leaving thousands of dollars on the table every year. And then comes the part nobody wants to talk about: Medicare costs. Just as your Social Security check ticks up, Medicare Part B premiums are set to jump by 11.6% in 2026. That means monthly premiums will rise to $226, with deductibles hitting $288. That $50 COLA bump? Vanished, devoured by healthcare costs. This isn't an accident, it's a pattern. Social Security raises are canceled out by Medicare hikes year after year, and that leaves seniors standing still while costs accelerate around them. And if you're still working, maybe part-time to make ends meet, you're not in the clear either. The earnings test threshold is rising to $25,000 in 2026. If you're under full retirement age and earn more than that, you lose $1 for every $2 earned over the limit. That's right, work too hard, and your benefits are slashed. The system penalizes effort. It discourages productivity. It punishes people for trying to stay afloat. But the attacks don't end with retirees. Disability recipients face their own silent war. The Substantial Gainful Activity (SGA) limit, the earnings cap for disability, will rise to $1,620 per month if not blind, $2,700 per month if blind. Exceed these numbers, and the government may decide you're not disabled enough. Even if your condition hasn't changed. Even if your job is unstable or part-time. A few dollars over, and the safety net disappears. And qualifying for Social Security is also getting tougher. In 2025, earning $1,810 in a quarter gets you 1 credit. You need 40 credits to qualify. In 2026, that amount will rise again. That means more hours, more work, more struggle, just to earn the minimum required to someday access your own money. Among all these changes, there is one bright spot. West Virginia will stop taxing Social Security income at the state level for those earning below $50,000 if single, $100,000 if married. This is progress. But it's limited. Most states still take a cut, and this reform only helps if you live there. Meanwhile, on the federal side, paper checks are being eliminated. As of September 30th, 2025, Social Security recipients must enroll in direct deposit or debit card payments. Fail to act, and you risk serious delays or worse, total disruption. Even more alarming, if the Social Security Administration claims you've been overpaid, they will now automatically take 50% of your monthly check until it's repaid. You get a letter. If you ignore it, they start taking half your money, no questions asked. Your only defense is to act immediately. File an appeal, request a waiver, fight it on day one. Waiting even a few weeks could cost you hundreds. Accessing help has also gotten harder. Many services that were once handled over the phone now require in-person appointments, and walk-ins are no longer allowed. For elderly or disabled Americans, this is a cruel shift. For those in rural areas, it's a logistical nightmare. Here's the truth that ties it all together. These aren't isolated updates. They're systemic pressure points, tightening every year. Your benefits are being chipped away through inflation, tax complexity, healthcare hikes, bureaucratic barriers, and quiet rule changes the media doesn't cover. The strategy is clear. Shrink the system without ever saying it out loud. And unless you fight to understand these rules, unless you prepare, you're left exposed. So here's what you need to do right now. Subscribe so you don't miss critical updates. Comment with your city and state. Let's map the impact across the country. Share this video with friends and family. Someone you know is about to be blindsided by these changes. Because while 2026 brings these shifts, what comes after may be even worse. Here's the question nobody in Washington dares to answer publicly. What happens when the Social Security Trust Fund runs dry and your benefits are slashed by 20% overnight? It's not hypothetical, it's documented, it's on the calendar, and in the next video we break down the timeline and what you must do to survive the cut. Stay awake, stay ready, stay defiant.